If you had put just $1,000 into Nvidia a few years back, you'd probably be sitting on a nice chunk of change today. But that opportunity? It's in the past. And there's no use sitting around regretting missed rallies. That's not how you build the next one. Right now, while the headlines are all about Palantir crushing earnings and AI giants trading over $100 a share, something more interesting is happening in the background. There are still a few high-potential AI stocks, ones that haven't been discovered by the crowd yet, quietly gaining momentum. The reality is this: the most talked about AI stocks? They're already expensive. That makes it tough for regular investors to get in early, before the real gains start. So the smart money is shifting focus, away from the hype, and toward early-stage tech disruptors with strong fundamentals. We're talking about small-cap companies working behind the scenes, building real technology and positioning themselves for the future of AI. Some of these names are still under $10, flying completely under Wall Street's radar. But they've got the right ingredients: innovation, real partnerships, growing contracts, and scalable infrastructure. Here's a closer look at 3 under-the-radar tech companies that might just become the next big winners, if they execute well. BlackSky is probably the most slept-on satellite intelligence company out there. While folks are busy tracking Nvidia and jumping into every ChatGPT spin-off, BlackSky's been quietly expanding its real-time geospatial AI platform, using its own network of satellites in low Earth orbit. And this isn't some science fiction concept. BlackSky's imagery and data are already being used by US defense and intelligence agencies. Their system delivers high-frequency, high-resolution images of the planet, fast enough to track military movement or economic activity almost in real time. That's the big advantage. It's not just AI, it's AI powered by proprietary satellite data. Think of it like a Palantir with its own eyes in the sky. So far this year, the stock has more than doubled, up over 120%. But this move isn't based on hype. It's supported by real growth. The company secured a $24 million contract through the NGA's Luno AOM program, focused on monitoring global defense and economic targets. That's on top of an already huge $290 million multi-award contract. They're also rolling out their third-generation satellites, with image resolution sharp enough to identify specific aircraft or vehicles from space. 2 are already operational, and 4 more are expected to launch this year. That kind of capability is in high demand, especially as geopolitical tensions rise and NATO increases its intelligence operations. Defense budgets are growing. And the market for space-based intelligence, surveillance, and reconnaissance, known as ISR, is booming. Technically, the stock recently broke out above $24 on strong volume. It's now pulling back to the $20 to $22 range, which could be a healthy consolidation. If it holds support at $20 and makes a push above $24.50, that could trigger the next leg higher. With a market cap under $800 million, this company is still very much in early growth mode. As they launch more satellites and land more government contracts, the narrative could shift from speculative to strategic. Yes, it's volatile. But that's where the upside lives. BigBear.ai has been a familiar name in the AI defense space, but it's starting to gain serious traction again. In the last month alone, the stock climbed nearly 90%. That's not a small move, and it has investors asking whether BigBear could be the next breakout in defense-focused AI. Let's talk numbers first. BigBear is still trading well below its previous highs, but it's made a strong comeback from the bottom, with a 500% plus rebound from earlier lows. Even now, while many AI stocks are trading over $100, BBAI remains affordable. Its forward price to sales ratio is around 11.6, compared to an industry average closer to 19. But this isn't just about valuation. The company is getting serious work done. BigBear holds a $385 million backlog of projects. That includes major government contracts like the Department of Defense's Orion platform, Project Lynchpin, and new global partnerships, including deals in the Middle East. Their software platforms, like Conductor OS and Pro Model, are already being used in national security, airport systems, and warehouse logistics. Even companies like Amazon are using their tech to improve operations. And under new leadership, BigBear has sharpened its focus. Their partnerships now include major names like Palantir, Autodesk, and Amazon, giving the company both strategic direction and technical credibility. Financially, they're showing signs of progress. In Q1 of 2025, they increased their cash to $17 million, up significantly from just a few months earlier, and cut long-term debt by over $50 million. Revenue also grew 5% year-over-year. Yes, the company is still unprofitable, but they're reinvesting in growth and taking a long-term approach, much like Palantir did in its early years. As for the chart, a move above $7.50 with strong volume could be the breakout moment. On the downside, a pullback to $6 to $6.20 might offer an attractive entry. But if it drops below $6, that could be a warning signal, with $5 as a possible support level. BigBear is still in the early innings, but it's shaping up to be a contender in the AI defense space, and it's doing it with real contracts, real growth, and improving fundamentals. Oklo was first flagged back when it was trading below $30. Now, it's sitting above $60, doubling in just a few months. Unlike the usual energy plays, Oklo is building something different: small modular nuclear reactors. These are compact, safe nuclear units designed to power remote areas, military bases, and industrial zones without needing massive infrastructure. Their design makes it possible to deploy reactors quickly, cut costs, and reduce risks. It's a forward-thinking model for clean, reliable energy, especially in a world that's rethinking energy security and carbon emissions. What makes Oklo stand out even more is its 20-year fuel recycling agreement with the US Department of Energy. That's no small feat. Add in backing from Peter Thiel and heavy insider ownership, over 60%, and you've got a company with both capital and commitment behind it. Oklo isn't generating revenue yet. But it's not just riding the nuclear energy buzz. It has long-term contracts, a solid business model, and the attention of key players in energy and government. As nuclear power makes a comeback, especially in the context of clean energy, Oklo's model could fit perfectly into global efforts to diversify power sources without relying on fossil fuels. On the technical side, the stock has broken key resistance levels and now shows support in the $52 to $55 range. A breakout above $60 would indicate continued strength. A pullback into the low $50s might offer a better price for long-term investors. If you got in early, you are sitting on a 2x gain. Taking some profits wouldn't be a bad idea. But if you believe in the long-term potential of next-gen nuclear power, there may still be upside ahead. So, looking at these three stocks, BlackSky Technology, BigBear.ai, and Oklo, they're each tackling very different sectors, but all with one thing in common: real innovation and strong growth potential. BlackSky is rewriting how intelligence is gathered from space. BigBear is helping modernize national security systems with applied AI. And Oklo is working on reinventing nuclear energy for a new era. Each one comes with risk, especially as small caps, but also offers a shot at outsized returns if they hit their targets. Which of these do you think has the biggest long-term potential?